from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, how a Delaware court could force Musk to seal the deal. From daily fines to allowing Twitter to seize his assets, we will talk about all the ways Musk could be held to his word if he loses what is shaping up to be an epic legal battle. Plus, Pinterest gets a big boost from Elliott Management after the activist investor takes a 9% stake in the company, shares jumping after hours. And Amazon had a surprisingly strong Prime Day. Sales jumped more than 8% from last year and even helped rivals get a little more online traffic. We'll break down all the data. All that in a moment, but first, some big tech moves after hours. As we mentioned, Pinterest jumping, Snap soaring as well in a flurry of late afternoon trades. Bloomberg's Ed Ludlow with us now for more. Ed, take it away.
Yeah, tech's been interesting this Thursday. Broadly, we had a down market. You see the S&P 500 softer by 0.3%. A lot of Fed speak. Right, we had that hot inflation print earlier in the week. A lot of chatter that the next Fed move will be a 100 basis point hike, pushing us towards recession territory potentially as they fight inflation. Then you had Fed speak throughout Thursday with a number of key names saying actually 75 basis points, and the Nasdaq 100, which had been significantly lower earlier in the session, closing up 0.3%. We did see yields push a little higher back towards that 3% mark, but we've been sort of fluctuating around, which has been interesting. Really quickly for the big picture, just look at this terminal chart, because I'm keeping a real eye on valuations right now. We're still asking the question of where the bottom's at, but you look at the valuations on the Nasdaq 100, that's your forward 12-month price to earnings. We're really down now considerably, and the question is, when will buyers start coming back into this market? When will we get over the psychology of what the Fed is or is not going to do? And as you mentioned, there's always news, right, in the world of technology. Forget the macro picture. These are company-specific things. In after-hours breaking news, you see Pinterest up 18% in after-hours, according to a Wall Street Journal report. Elliott, which is an activist investor that we talk about a lot on this program, taking a reported 9% stake, as you said, sending the shares higher. It was interesting. Snap up shy of 2% at the moment, but it had been up as much as 5%. Kind of being carried by the momentum of Pinterest. So we don't know much more than that, other than according to this journal report, Pinterest has been talking with Elliott Management in recent weeks. We don't know what about. I guess we'll find out. Also, an interesting news out of Facebook/Meta that Facebook is going to start allowing folks to have up to 5 profiles. 5? Yeah. This is interesting because we've been talking a lot about accounts, right, on Twitter's platform, about the number of fake accounts, bots, and this was kind of a buck the trend kind of story, right? Meta coming out saying they'll allow Facebook users who have a Facebook profile to have up to 5 profiles in total. That didn't do much to boost the stock. One of the biggest points drags on the Nasdaq 100 was Meta, down 3 percentage points. Interesting, Tesla, by the way, ending in the green, up 0.5%, because we reported Andre Karpathy, who was the AI chief, had resigned yesterday evening or on Wednesday evening, and it had been significantly lower coming back. Some other names I'm keeping an eye on, Booking Holdings. A lot of these travel stocks, including Airbnb, by the way, in the red as travel chaos continues in Europe. And then interesting, what do I do every day, Em, when I wake up in the morning? You know exactly what I do. I go on Twitter. But Twitter wasn't working on Thursday morning.
It was not working, and you were up early enough to see it. Thank you, Ed, for always covering our bases. Okay, meantime, imagine this. Elon Musk, known for his delight in defying authority, is ordered to complete his $44 billion purchase of Twitter, and he refuses. How could a Delaware court force his hand? That's something that we've been exploring. I want to bring in Bloomberg's Kurt Wagner now to discuss. Kurt, if you go through Twitter's complaint, they come out swinging. They want to do this $44 billion deal. This is not posturing or ceremony. They want their $44 billion. Can a court really force Elon Musk to pay up?
It sounds like the answer is yes, and thankfully our colleagues who, cover the court are much closer to this, and they had a story today that said there's a few things they could do. They could slap a big fine on Elon Musk.
A daily fine, even.
Right? So even the richest man in the world might not want to pay a fine every single day. They could seize his assets was another thing, and obviously that would include Tesla stock. So I think those are the main probably motivators, if you will, to do a deal like this, on top of course, actually paying the money that he has to pay.
They also could allow Twitter to seize his assets, which I found interesting.
I'm not sure if Twitter would want to seize his assets at this point. They're trying to make him seize their assets, right? But I find this whole thing, to be incredibly interesting and complicated because think about this, Emily. For 60 pages, Twitter was saying, here's a guy who's acting in bad faith. Here is someone who's lying, who's misrepresenting. And now we want him to own the company and be everybody's boss, right? It's a very complicated issue.
We pulled some quotes from those 60 pages, and it's actually kind of a riveting read, written in a more conversational style than you would expect a complaint to be. Here's one. Musk apparently believes that he, unlike every other party subject to Delaware contract law, is free to change his mind, trash the company, disrupt its operations, destroy shareholder value, and walk away. His exit strategy is a model of hypocrisy. And then there's this, that he exhibited little interest in understanding Twitter's process for estimating spam accounts. In a June 30th conversation with Twitter CFO Ned Siegel, he acknowledged he hadn't even read the detailed summary of Twitter's sampling process provided back in May. Siegel offered to spend time with Musk once again to review it. That meeting never happened, despite Twitter's best efforts. What do you make of that?
I mean, Twitter went out of its way to show and paint a picture of someone who has lost interest in this deal, right? Basically from about June 23rd, when Bob Swan, the former IBM CEO who was leading the Musk deal team, he left. From then on through the 4th of July, the company basically said, we had trouble getting in touch with him. We tried to have meetings. He wouldn't show up. When he did show up, he wasn't prepared. They're really trying to convey that Elon really stepped back from this deal, and that's why it's falling apart, not because of anything that Twitter did.
So here's the thing. Elon Musk doesn't shy away from a fight, and even with major regulators.
That's right.
So we're not expecting him to just back down.
No, and I've seen some people speculate, well, why don't they come to a settlement? Why doesn't Elon pay half the price and everyone walks away? It's like, can you imagine Elon Musk voluntarily saying, here's $20 billion, sure, I'll be the loser in this situation. I just have a tough time imagining that. So it does really feel like it's either going to be $44 billion or nothing. I know that sounds extreme, but it's just hard to imagine a middle ground right now.
All right, well, certainly something we/you will continue to follow. Thank you. Kurt Wagner. Meantime, payments company Stripe has told staffers the private market valuation of the company has dropped more than 27%. Stripe's new implied valuation is about $74 billion, down from $95 billion in its most recent fundraising. This as the stock prices of Stripe's publicly traded peers continue to plummet. And coming up, with Roe versus Wade overturned, women are turning to telehealth for reproductive health. We're going to speak with Kate Ryder, CEO of Maven Clinic, about the company's role in a post-Roe world. This is Bloomberg. Since the overturning of Roe versus Wade, an employee benefit package might be the only way women seeking abortions can even afford it. Tech giants have responded to the ruling by pledging their support and financial assistance. But how's this all playing out in the aftermath? Joining us now, Kate Ryder, CEO of Maven, a women's and family health clinic that partners with companies like Microsoft, L'Oreal, and AT&T. Kate, thank you so much for joining us. So look, in one ruling, the rules changed for women across the country. What's happened in the aftermath? What have you seen?
We knew this was coming, ever since XB8 in the fall. I think a lot of people in the medical community, were predicting this. But I think what we heard is, we work with a lot of leading health plans and employers for their women's and family health benefits, from fertility to maternity. And a lot of them didn't know what to kind of make of it. The second that the Supreme Court decision was kind of struck down and brought down, even our most conservative clients that previously didn't want to take a position stood up and designed kind of employee benefit packages through Maven and other services to support travel across state lines, to support pregnancy options, counseling, and a lot of other things. So that was encouraging.
So what kind of demand and requests are you seeing from Maven members? Are you seeing a surge in requests for reproductive health?
I think anxiety, our mental health is up, but I think it's not just Maven members right now. We're also paying attention to Maven providers. So, one of the things that we've been hearing is there's about 50% of US counties don't have an OBGYN, and a lot of those are in states where they're restricting abortion access. A lot of our clinicians are really concerned. We're hearing people that are going to move. And so that's going to create even more provider shortages. So, it's both the members, but also the providers themselves.
Hang on, did you just say 50% of US counties don't have an OBGYN?
Correct.
Isn't that just a basic level of care for any kind of women's health needs?
I think one of the reasons I started Maven 8 years ago is because women's health has always been underserved. A lot of these statistics kind of people didn't really pay as much attention to, but technically they're called maternity care deserts. And I think the ACOG and the medical community is afraid that it's going to be even more exacerbated with this ruling.
So here's the question. There are companies and startups like yours that are now potentially serving women in states where abortion is illegal. How are you navigating that?
Well, I think, what we always think about is the well-being of the members, our providers, our clients is always first and foremost. And we also, of course, will always be in compliance with the laws. And so our legal team, there's a lot that's still really uncertain, is working overtime to try to understand this. And so, we have to obviously be in compliance, but the well-being of many of our members in those states is, as evidenced by a lot of, increased acts for support around emotional well-being, around just the uncertainty of even bringing kids up in this world. What do you say? How do you explain what's going on? We're seeing all of that on our platform.
Meantime, you've got a number of companies that have come out and said, we're going to cover travel benefits for employees who need to cross state lines to get an abortion. So, for example, Uber, Lyft, DoorDash have said they would do this for their employees, but Bloomberg has a story out today saying, well, they're not doing this for their shoppers or their drivers or for all of the contractors on their platform. What do you think the responsibility of these employers are?
Well, I think that we're living in a world where, as we see, it's part of why the employee benefits industry is such a robust industry, as we see that less and less services kind of offered by the government, companies, Maven included, and a lot of our clients are stepping up to fill a lot of those gaps, because at the end of the day, your people are everything when you're growing your business. And so not only are you helping your people, but, there is an economic argument for talent attraction and retention, and just kind of creating a good culture so that your people can be their most productive and their happiest at work.
Meantime, there are some states, I'm thinking right now about Kentucky, that are considering laws that would define life right after fertilization, which would potentially put IVF and fertility treatments in danger. And you're seeing patients, we're hearing that you're seeing some patients try to move their embryos, for example, out of those states. Are you seeing this?
Yes, we do support the financials around moving the embryos across state lines through our Maven Wallet benefit. But I think that what we hear from the fertility community is that there is still so much uncertainty, and so a lot of people just don't know what's going on and are taking the embryo transfer as precaution. But I will say that hopefully that as a lot of this data comes out, where this is bad for business in a lot of these states, it's bad for people, it's bad for families, it's bad for women, that hopefully some of these more extreme bills that are in the state senates will not get passed.
What are your biggest fears, though? I mean, there are so many cascading issues here. What do you worry about the most?
Yeah, listen, I think that the saddest thing about this is that this just disproportionately affects, already vulnerable patients, right? So lower income women, Black women, there's already a maternal health crisis in this country. When you look at even the data coming out of a lot of the states with these trigger laws that are going to have more restrictive abortion access, the maternal mortality rate is 2 times that of other states. And so, already when we have the highest maternal mortality rate in the developed world and we're restricting restricting access even more in women's health, where abortion, about 1 out of 4 women get abortion in their lifetime. It's a very common procedure and part of standard healthcare in women's health. That this is just, this is going to make our outcomes even worse. It's going to hurt women. It's going to hurt families. And I hope that, that quickly states will get on the right side of this and recognize that this is just healthcare.
All right. Kate Ryder, CEO of Maven Clinic. Appreciate you sharing your perspective here today.
Thanks for having me.
You. All right. Coming up, Amazon pushing to end 2 antitrust investigations by the European Union. Could this be a blueprint for big tech compromises around the world? We'll discuss. This is Bloomberg. Pinterest shares jumped more than 20% in late trading after Dow Jones reported activist investor Elliott Management has taken a 9% stake in the company. Our very own Alex Barinka joins us now to discuss. So why are shares jumping on this news?
Yeah, shares are probably jumping on this news because investors are looking for something to happen at Pinterest. Pinterest has had an interesting go of it the last couple of years, both financially. They're seeing strong ad sales, but they're seeing users fall off to the tune of 9% decline in monthly active users in the last quarter. So this is a company that's kind of been around for a while. There have been a lot of questions as to where does growth come next. You'll recall not too long ago, there were those talks with PayPal for a potential deal. The company's been trying to kind of expand into some more arenas like into e-commerce. But between that and the longtime CEO stepping back from that role, it seems like Elliott sees an opportunity to kind of shake some things up and maybe push for some changes that it's looking for at this business.
Interesting. Yeah, huge shakeup with Ben Silbermann leaving after all those years. Bill Reddy, longtime former payments executive who worked at Braintree, which got bought by PayPal for many, many years, taking over. Do we know yet what Bill Reddy's plans are?
We don't know yet, but this is a guy who, as you mentioned, comes from Google, comes from the ad side. So this is a guy who has spent a lot of his time figuring out how to make money online. So that would be the area that I would expect this company to continue to focus on. It's also, frankly, again, the area that we've seen some pressure on this company and some questions on this company from the analyst and investor community up until now. So whether or not Elliott is on the same kind of brain length as Bill Reddy as he takes the helm at Pinterest, I guess this is a place we will have to see. But if I were looking at his background and saying, hey, what's the most kind of opportune place for him to lean in, it is to try to counteract that user decline with juicing up revenue even more than we saw in the 18% increase that we saw in the past quarter.
All right, Alex Barinka, thank you for giving us that context from LA. Appreciate it. Meantime, Amazon is a step closer to settling 2 EU antitrust investigations concerning whether the company uses sales data of its own third-party sellers to unfairly favor its own products. The European Commission is now asking Amazon's competitors for feedback on a proposed settlement. Amazon says it's engaging constructively. Bloomberg's Matt Day covers all things Amazon and joins us now. So how big are the compromises that Amazon is actually proposing here, Matt?
I think they're meaningful. One of the things they're proposing is offering kind of a second option to buy a product, not just what Amazon recommends, which the vast majority of people just click through, but offering a second tier. But I think if you went inside a Seattle and Amazon's offices today, they'd say they're fine with this. This doesn't dismantle their marketplace. They can kind of keep doing business as usual. They just have to promise they're not gonna break the rules, offer sellers another option to get seen.
Obviously, big tech is facing antitrust regulatory scrutiny around the world. Is what Amazon is doing here potentially a harbinger of compromises to come from others?
It's certainly the compromise they'd like to see. I mean, they like this a whole lot more than they would like the antitrust bills being kicked around in the U.S. Congress, which strike them as much more structural risk for them. They don't want to have to do anything that kind of changes how they run their marketplace and their retail websites at its core. And I think this EU thing kind of threads that needle for them.
Meantime, you're also reporting today that unionization efforts at Amazon warehouses in New York are kind of losing momentum. This after a major victory at least one warehouse in New York. What's happening?
Yeah, so the Amazon Labor Union, an upstart union in Staten Island, they were on top of the world. If you go back to April when they won and they got the rights to bargain for workers at one facility, since then they've lost their second election and they've paused efforts to organize two more places. So a lot of what they're doing these days is really playing defense. They're trying to kind of hold on to their win in labor board hearings. Amazon has challenged that first result. So basically this outfit that looked like they could do no wrong a few months ago, they've kind of gotten to the hard part. They're having to put the work in to defend their early gains.
Chris Smalls, who we just saw popping some champagne there, who's been leading this effort, he also testified at hearings where Amazon has been protesting the win. What happened there?
Yeah, he came on, he's testifying from a hotel room. He's kind of on a permanent tour of other labor groups and speaking engagements. Amazon works real hard to kind of, peg him as a rule breaker, saying he was on company property and trespassing and all these things. And Smalls kind of did his best efforts to keep that at arm's length. It's been a really contentious process so far, a lot of kind of snipping back and forth from the union's lawyers and Amazon's.
What about unionization elsewhere? Are we seeing any, efforts gaining momentum?
There are certainly glimmers. Just in the last couple of weeks, a couple of outfits, one in upstate New York and one in Kentucky, have said they're going to affiliate with the Amazon Labor Union. Kind of remains to be seen how far that's going to go. And there's definitely stuff popping up in other places in the country. North Carolina, we've heard about a new effort in the last few weeks, and there's still that race that is too close to call that an Amazon union drive in Bessemer, Alabama. So definitely still something taking up a lot of execs' time in Seattle.
All right, Bloomberg's Matt Day. Thanks much. Well, in other Amazon news, it is official. Jeff Bezos has tweeted the trailer for Amazon's long-anticipated Lord of the Rings series coming September. Prime Video will release the drama to subscribers in more than 240 countries and territories worldwide. The streaming service will upload weekly episodes throughout the season. We will see if it lives up to the hype. Coming up, is big tech losing its edge? We're going to speak to Edith Young of Race Capital about whether the top U.S. tech giants are ceding too much ground to TikTok and other Chinese competitors. She's next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. I want to get back to the markets, and shares of Chinese tech companies dropped after a flood of news. Bloomberg's Ed Ludlow back with the latest headlines on that. Ed.
Yeah, it's interesting what's coming out of China. You look at the NASDAQ Golden Dragon China Index, which is an index of the US-listed shares of Chinese tech companies, down 2% during Thursday's session, but on track for their worst week since May. The big report from the Journal on Thursday was that Alibaba executives have been summoned by regulators over a data breach, or data theft as it's being billed, coming from China's police database. That has basically ignited more concern about regulatory crackdown of tech companies in China. There's other big news items out there. We're going to talk a bit more in the show about what the US is doing to make itself more competitive strategically against the Chinese technology sector. But you'll remember Monday that there were some regulatory fines placed on tech companies. I'm bringing this up because you look year to date, the US listed shares of Chinese tech companies had started to outperform the NASDAQ 100. We'd started to feel a bit better about the regulatory environment in China, which has helped boost that index because, of course, they had a second or even a third wave of COVID and COVID-related restrictions in the country, which eased. That boosted the tech sector as well. Now, with the news flow of this week, we're starting to get some jitters and concerns as well. Also, Bloomberg exclusive reporting, citing sources that Chinese authorities are very concerned now about capital outflow from China in a high-rate environment, keeping a close eye on what the Fed's doing. So we've been very distracted recently, Em, you and I. Mr. Musk mostly has been keeping us on our toes, but pay attention to China and look at how the markets are reacting.
All right, well, we're going to pay some attention right now. Ed, thank you. U.S.-listed China stocks tumbling, leaving them poised for their steepest weekly losses since March. This after a report Alibaba is facing an inquiry in China in connection with a data theft and renewed regulatory concerns. Joining us now, Edith Young, general partner at Race Capital. So what's your take on this kind of fresh round of Chinese regulatory scrutiny on big tech giants, which has been ebbing and flowing for the last several years now?
I think all tech companies and founders been basically walking on eggshells, and there's a lot of different changes of various different security law, privacy, regulatory. It's just been very, very tough, not just for the Alibaba and Tencent of the world, but also for earlier stage. Many of them been waiting to get listed in the US. But a lot of the companies that I'm aware of either wanted to go through SPAC. The Chinese company now is changing their course, thinking about Hong Kong, thinking about Shanghai. So it's been really, really tough for the tech industry in China.
So there are two narratives going on here. One is that, China tech is so competitive, could supersede the United States, and the other is that the Chinese regulatory crackdown could destroy some of these Chinese tech companies, which is true.
Well, I think that first and foremost, some of the biggest Chinese companies, including Alibaba, like most of their business actually are not even in the US. Many of my friends don't even know what WeChat is or Alipay is all about. Mm-hmm. So I would say, the big tech giants, the core business is still in mainland China, is absolutely a parallel universe in terms of tech. Having said that, I think every single new companies are thinking this is not going overseas. This is about global markets, similar to ByteDance. From day one, they wanted to be international, but the international Chinese version of TikTok is Douyin. Is a completely different way of operating in terms of product. So a lot of the Chinese company want to respect international market, comply with international law, but they definitely have the ambition to be global companies from day one.
Well, that brings me to the TikTok that we in the United States know, which is constantly brought up at, as doing things better than Facebook and Google and all of these US-based tech companies. What do you think?
There's no better or worse, and obviously in China, there's not much of a data privacy as such. So therefore, in terms of AI, definitely, I think the ability of machine learning in China is insane. And this is not just for social network. In fact, for electronic vehicle, there's just crazy growth. I saw news that BYD actually now, in terms of number of EVs, has more than Tesla in some sense. So there's no competition. Just the way you do machine learning in English versus Chinese is quite different. So I don't think it's not a win-lose situation. It's really just a parallel universe in terms of the internet.
What about Web3? Who's winning?
It's definitely not in China. There's no NFT, no Bitcoin mining, no crypto trading. It cannot be offered to Chinese citizens. So a lot of many of my friends in China who's in Web3 have moved to countries like Singapore or the UAE. Those are some of the hot spots. And I think for Race
Capital, China could get left behind.
In some sense, I think in Race Capital, we certainly meet a lot of founders that left China, but now in Singapore. So they're a Singaporean company, but they want to continue to, so the company like StepN, which built on Solana, many of the exchanges from the ByteDance, that's in some sense why FTX have moved from Hong Kong to the Bahamas for similar reason.
What do you make of the crypto volatility right now? We just had a headline cross that Coinbase is now dropping out of the top 10 exchanges in the world by volume.
And if you look at the top 10 in the world, many of them actually originated from China, regardless the Binance, Huobi, OKEX, of course FTX. And I think Coinbase, to start with, less FTX actually started in Hong Kong. The world in terms of trading users and volume outside the US is actually much larger than the US. So it's not surprising Coinbase sooner or later will sort of drop below. But having said that, top 5 in terms of number of users, Coinbase is definitely still top 3. But just in general, I saw, like before I came over, I think the total combined market cap, a trading volume, is now back to over 900 billion. So it's not as bad as 30 days ago, but still, I think the rest of the world, particularly in Asia, is now catching up, like beyond just the U.S. trading volume.
Right. The question is, how long does the winter last?
Who knows?
All right. Edith Young, Race Capital, great to have you here and see you in person. Thank you, Edith, for stopping by. All right, coming up, policymakers are rethinking crypto energy rules. This amid record high temperatures in Europe and heat waves across the United States. Our crypto report is coming up. This is Bloomberg. Bitcoin miners in Texas are taking the week off to keep the state's energy grid intact. Right now, Western Europe is undergoing record high temperatures, and most of the U.S., particularly the South, is preparing for a triple-digit heat wave this weekend. Hot weather, the war in Ukraine, supply chain bottlenecks are sending energy costs higher, and that's beginning to impact Bitcoin mining. Bloomberg's Shonali Bosick joins us now from New York. How exactly, Shonali, is this energy crunch impacting them?
Yeah, it's very simple. If they turn off the machines, it's impacting their profitability. And remember, this is already in a tough year for Bitcoin in general. So you have Bitcoin-related stocks taking a hit just due to the price volatility. Some of them are bouncing back. As you can see, though, Riot Blockchain is one of those companies very highly tied to mining, and the drop is steeper than you see at a lot of other companies. More than 76% of a drop there, just this year alone. And if you look at Core Scientific, the drop is even bigger. It's 86% for the year. Just to give you a sense of how big the mining load in Texas is, over 1% of the total grid capacity being pushed back represents all of the industrial scale Bitcoin mining. It represents a significant amount of a household's worth of energy usage. So it's a very significant move we've seen here, as we've seen a number of companies move to Texas to really take advantage of that energy system, of the power grid over there. And you are now seeing what that strain can look like when critical infrastructure, Emily, comes under pressure.
All right, Shonali, stay with us. I want to bring in Kathleen Brightman. She is the co-founder of the blockchain platform Tezos. And Kathleen, I'm so curious how this is playing out from your perspective. You're seeing these miners shutting down their operations in Texas. What does this look like from inside the industry?
Well, I think the issue of mining in Texas has been kind of fraught in both ways. As you might remember, unfortunately, there were a number of people who nearly froze to death in Texas earlier this year because of similar issues with their energy grid. And I guess Bitcoin miners and promoters who tout the greatness of proof of work tend to argue that this is like a battery, and it's really not the case. Like, a one-way battery is not a battery. And a lot of the strength that has been argued about Bitcoin's proof of work is that it's sort of this source that can be tapped into, but in fact, it's just kind of a massive suck on the grid.
How do you see this playing out? I mean, I wonder if there's an upside forcing miners to think about how to make the process more sustainable.
Well, I co-founded a cryptocurrency called Tezos, which is proof of stake. Most cryptocurrencies that have launched in the last few years use proof of stake, mostly because it's the best technology in class. A lot of the arguments about Bitcoin and its energy uses are mostly because it's kind of like this weird vestigial organ that has been attached to Bitcoin that has sort of reverence for no good reason from the people who usually own too much Bitcoin to think about it otherwise.
It's interesting because you see the proof of stake concept as it pertains to the Ethereum merge as well. And I'm wondering some of the complications around that. How does that complicate this kind of struggle between proof of stake versus proof of work and the reliance on energy as it pertains to it?
Well, if you look back at the original marketing materials for the Ethereum Foundation's fundraiser in 2014, they advertised themselves as imminently transitioning to proof of stake. So they've really been talking out of both sides of their mouth for the last few years. when they discussed their imminent transition and the virtues and benefits of proof of stake versus proof of worth. What's interesting actually is ties into sort of the recent market crash in cryptocurrencies is that there's been this sort of token called staked Ethereum that's run for the last year. It's from the Ethereum Foundation on what's called a beacon chain. And this is meant to be some sort of test for proof of stake. So you can convert your Ethereum to Ethereum on this chain, the staked Ethereum, but not the other way around. So in theory, it kind of had this inflationary reward. And so people would borrow Ethereum and buy staked Ethereum. And that took a lot of Ethereum out of circulation, which arguably increased the price, or at least had some sort of positive effect on the price. But in reality, it's really no different than something like Hex, which is kind of a Ponzi scheme that's crashed in the last few weeks, which is just a token that basically pays you for freezing it. The longer you freeze it, the more you receive, so on and so forth. But it's all inflation.
That's a really big statement, actually. Kathleen, I mean, how do you think about that inflation within Ethereum, and then also kind of the distortion in prices you've seen when you think about what's happening with staked Ethereum and the broader ramifications that has for the system?
Well, if you look at like the last few weeks, there have been a number of different systemic crises. We sort of have the cryptocurrency's own version of 3 hours capital is long-term capital management, basically, but with crypto. A lot of the reason that there's so much contagion in the cryptocurrency space, and there's been a lot of, I guess, bad deleterious effects, has been largely because they sort of saw things like staked Ethereum as a sure bet. So it's not dissimilar from this, smartest people in the room having models that are basically predicated on nonsense.
How are you watching the market fallout? Obviously, we saw the Celsius bankruptcy filing. We're seeing, the crypto winter get colder and colder. What is your sort of prediction about how this continues to play out?
Well, as your Bloomberg colleague, Joe Weisenthal, always says, it could always go down by 100%. For those of us who've been in this industry for quite some time, it's completely unsurprising that something like Celsius would go bankrupt because economics does have laws that transcend the word blockchain, contra popular belief by some people who monitor this stuff and analyze it. But I do think that there were some things that were predictable. There are some things that were less predictable. For example, apparently 3 Hours Capital made a number of equity investments, and as part of their, equity investments, they would often offer to manage the treasury for some cats, and so that's unexpectedly bad, uniquely bad, I would say. But yeah, I think we've just seen a lot of shakeout from things that just wouldn't have worked, and you really can't make a sustainable protocol or business based on the theory that number will always go up, right? Which was most people's risk model going into this.
All right, well, we all love quoting Joe Weisenthal, Tezos co-founder Kathleen Breitman, and our own Shadali Bosick. Thank you both. Coming up, turns out Amazon not past its prime. Web sales up 8.5% during the tech giant's two-day Prime Day sales event. We were going to bring you all the details next. This is Bloomberg.
This week was Prime Day 2022, and Amazon says that overall savings for members topped $1.7 billion, making it the biggest Prime Day to date. Amazon Prime Day is a two-day shopping event geared towards Amazon Prime subscribers, where the company and many of its resellers give some of their best discounts of the year on many of their most popular products. Amazon says that over 100,000 items were bought per minute during the two-day event, topping 300 million items in total. The best sellers over the period were premium beauty products, Rachel Ray kitchen accessories, car wash accessories, pet products like Greenies, Crest toothpaste and Oral-B electric toothbrushes, clothing for kids and items from Levi's, air purifiers, kids' lunchboxes, Shark vacuums, and Lego sets. For the summer, of course, sunglasses and swimsuits were also very popular. For us tech fans, there were also some strong deals, leading to a notable number of Apple Watch Series 7 and Beats by Dre headphone purchases. This comes as Apple and its retail partners look to clear inventory for 3 new Apple Watches coming this fall. And of course, Apple's Beats by Dre is always working on new headphones and earbuds. For its part, Amazon also said its own consumer tech devices were strong sellers during the event. It particularly pointed out the Fire TV, Echo speakers with Alexa, and Blink home security devices as doing well. If you missed out on this month's Prime Day, there are early indicators that the company will hold a rare second Prime event this fall, so stay tuned for more details on that. I'm Mark Gurman. This is Power On.
Thank you, Mark. I want to stick with Amazon's Prime event and bring in Melissa Burdick, PacFood president and a 10-year Amazon veteran. So, Melissa, anecdotally, I feel like I got a few more things on Prime Day than usual. I don't know if that is an example of a broader trend, but how did it stack up for you?
Yeah, well, if you notice what he was just talking about in terms of what people are buying, it was different this year. There is a bigger focus on household essentials and home. Usually Prime Day is a big consumer electronics event, big ticket item event. But this year, I think that we're seeing a lot of inflationary impact where, food prices are up over 12% versus the inflation average of 9%. So people were coming in looking for deals. Deals were at least 30% off in the food space. And so top items day one were things like Frito-Lay chips, Amazon basic trash bags, Cascade dish pods. This is a different year for things like that. So I think that what we're seeing is just the different category shift of what people are actually buying this year.
Why did it take so long for Amazon to get it right? I mean, I feel like we've talked about so many Prime Days over the years that were underwhelming.
I think, honestly, Amazon did not lead as much with their electronic items or brands. I mean, they had heavily, steeply discounted products. Their products were discounted up to 48% off. So they definitely had a good year with their own private label products. In the past, I always thought of Instant Pot, iRobot, 23andMe, DNA kits. Those were kind of the big products that they were always pushing. But this year, they did a couple of different things. One was they had better personalization widgets. So when you logged into Amazon, you had more personalized items that were for you. So that might have been a way that you found things. They also had a better emphasis on influencer marketing. In my opinion, that had a hit and a miss. So the hit was they did a much better job of priming influencers off Amazon to drive traffic to Amazon. The miss that I saw this year that has just been a continuation is Amazon Livestream. So that's kind of their QVC-like influencers talking about products. And some of the chatter that I've heard about is, people, didn't really find it productive or engaging, although it was something Amazon called out today in their notes that they had 100 million views of their live stream. So it continues to be something that they focus on. But, hopefully they will get it better for Prime Day V2 coming in the fall.
Let's talk about V2. What do you think they'll learn from this, and what are you expecting this fall?
That's the beauty of Amazon. It's this constant hotbed of test and learns. And so, this personalization, this influencer marketing, the ways that people are buying more products, they're going to learn from that, and they're going to focus on a V2. One of the other things I like about the Prime Day in October, they did this in 2020 when they moved Prime Day during the pandemic from the summer to the fall, and they moved demand forward. And that really spread out, the demand during the whole Q4, and it kind of sped up, people buying things earlier in Q4. So it has a lot of benefits for Amazon.
And something that we haven't talked about as much is advertising on Amazon. I understand that was a more interesting story this Prime Day around.
Well, every Prime Day, people always spend more money. It was a little bit of a question because of inflation and raising costs. Would advertisers come in? But they absolutely did. We actually did a study, a sample size of some of our clients, and we saw that CPMs increased 36 to 75% above normal levels, but also there were millions more impression volumes. That means that just so much traffic that they're able to take advantage of. Amazon also has this great metric for especially CPG companies called new to brand. That metric shows, incremental people are coming in and buying their brand, and that was up hundreds of basis points. So
maybe it's not just that the deals were better; it's that the advertising was also more effective.
Yeah, and it was just a great opportunity. Amazon has a self-serve ad platform, so they make it very easy for brands to come in and bid on their keywords, on their competitors' keywords. So it's a great way for brands to be able to take advantage of the traffic and be able to drive people to their products.
All right, well, here's to the Instapot. Melissa Burdick, PackView president, thank you, as always, for joining us. Well, that does it for this edition of Bloomberg Technology. Tomorrow, we're going to be chatting with blockchain guru Anthony Pompliano about his employment training business, specifically for crypto. They just raised some new cash. And don't forget to check out our podcast. You can find it everywhere you get your podcasts, and of course, at Bloomberg.com. This is Bloomberg.